Welcome to Home Biz Tax Talk. My name is Lysandra Everett. I am the Home Biz Tax Lady, where I help home business owners win the tax game. Home Biz Tax Talk airs Monday through Friday, 9 o'clock-ish. And when you tune into my show, you're going to hear about topics that are important to the home business community. All right, so I want to talk about claiming a casualty loss after any natural disaster. But right now, we are still dealing with Hurricane Dorian. Hurricane Dorian hit the Bahamas as a Category 5 a couple of days ago. It decided to hang out there for a little bit, and now it's starting to make its way up the U.S. coast. So that is going to impact people in, Georgia, Florida, Georgia, the Carolinas, and even in Virginia. They have already started some evacuation processes from the coastline. So there are going to be people that are impacted by Hurricane Dorian. We can only hope and pray that we are just talking about casualty loss and not loss of life. But the thing about it is that with the Tax Cuts and Jobs Act, that really changed how we can claim those types of losses. It used to be that if you had a casualty loss, that you can claim that on your Schedule A. But with the Tax Cuts and Jobs Act, that changed to where you can only claim those losses in a federally declared disaster area. So I got my notes over here. So I want to make sure that, that I cover everything, because it's a lot, you guys. All right. So, also, there are no more miscellaneous itemized deductions on the Schedule A. So, if you were an employee that claimed business expenses, you had to come out of pocket. Like, I had a lot of people that were plumbers, that were salesmen, that, they were employees, but they really had those unreimbursed employee expenses. You won't be able to claim those losses either. Okay. Not in that way anymore. So let's define a federal casualty loss. So a federal casualty loss is a casualty or theft loss of personal use property that is attributable to a federally declared disaster. The casualty loss must occur in a state receiving a federal disaster declaration. So if you want to find out if your area is a federally declared disaster area, you can go to the FEMA website to find that out. So, it really does matter. So let's talk, what normally is a casualty loss. There's a federal casualty loss, and then there's a casualty loss. A casualty loss is defined as the damage, destruction, or loss of property from sudden, unexpected, or unusual event. I would think Hurricane Dorian would be an unusual event, but also like a tornado or fire, a flood, or something like that. Okay. But it does not include normal wear and tear. So if you got some type of infestation, then that does not count as an unusual occurrence. That is like a wear and tear type thing, not, something like that is more of a force of nature or act of God. Okay. So, if you're going to claim a casualty loss, you're going to have to itemize and with the Tax Cuts and Jobs Act, there are a lot fewer people who are itemizing. So even though you may experience a loss, you may not see that additional tax deduction as you would have normally prior to the Tax Cuts and Jobs Act. The other thing is that if you are reimbursed by your insurance company for your loss, you can't go and claim that on your taxes. Now, if your insurance doesn't cover the entire loss, then you can only claim what's not covered. You know what I mean? So it's not like you can get, if I'm claiming the loss of a phone, right? And the phone is $300, and then I get reimbursed $300. Okay, well, that's a wash. We're done. Now, if the phone is $300 and I get reimbursed $500, that's a $200 gain. Got to report that. Okay. Now, when you are reporting your loss that is due to a federally declared disaster area, the one major thing that has changed is that you have to now provide what is called the FEMA disaster declaration number. So you can't just go off all willy-nilly and say, yes, this is a federally declared disaster area, you now have to have the declaration number to put that on your return. Be careful with this, because if you decide that you're going to say, okay, yeah, I have this loss, and you just go and put a number there, please remember that lying on your tax return is a felony. Okay, so just don't do it. All right. But yeah, that, those are the main things. There's a lot of math that goes into, exactly how much you can actually claim. You've got to deduct, I think it's $100, and then there's some more math that comes to that. And, and I would highly recommend that you get with a tax professional to help you do this so that it's done properly if this applies to you. Okay. Don't be like some folks that swear they're in this disaster area and steal money, you guys, because that's really taking from people that really need it. And we've seen it happen. What else? I think that's it. Those are the main things. Just knowing that if you have a casualty loss, that's in a federally declared disaster area, you can claim those losses. If you're not in a disaster area, then you may not be able to claim those losses. It depends on whether or not you're itemizing. So yeah, absolutely get with a tax professional to find out. As I get more information, as we see how Hurricane Dorian progresses up the coast, if there's information about any delays and any tax filings or anything, I'll be sure to add them in the comments here so that you are aware, okay? So thank you guys so much for tuning in to Home Biz Tax Talk. Again, we air Monday through Friday, 9 o'clock-ish, and you can come right here to get your questions answered about your home business taxes, all right? Have a great day, and I will see you all next time. Bye.